Good morning, everyone, and welcome to the WCFF Sponsor Spotlight session. This is session number 7, so all the S's this morning, and it is only apt then that we are joined by ScotPac Business Finance today. Today we are going to be talking about their unsecured product, which does have a secured element to it, but I certainly am not the expert here, and I am very excited to welcome Brooke Johnson, who is the Team Leader of Sales at Business Boost Loans for ScotPac. Welcome, Brooke.
Hi there, Janelle.
Nice to see you. Amazing to see you. First of all, I just want to say thank you, obviously, to ScotPac. With having such a big product suite, we wanted to make sure that we could cover off all these sessions. So Erin caught up with us early on in the piece, and we're going to be talking to Mags in a couple of weeks about the debtor and trade piece. But today we want to talk about Boost Loans. Some of you may know as, formerly known as Business Fuel, but is now Business Boost Loans with ScotPac Business Finance. And we're really, really grateful for the sponsorship that ScotPac have given the forum and the support. So firstly, thank you very much.
Thank you.
A little bit of keeping, so please use the chat function for questions as per normal. We can ask them along the way, or we can save them all to the end. We'll just see where they're appropriate. So please make sure you use that chat function, and Brooke's details and how to reach out to Brooke or anyone in the team she'll provide at the end of the presentation. So it's time for me to stop chatting and hand over to the wonderful Brooke, who's been with the business for a really long time, knows his product inside and out. So I'm just going to share my screen and make sure that everyone can see the presentation. Can you see that now, Brooke?
Yes, I can see. Yeah.
Perfect. Over to you.
Okay. Well, thanks, Janelle. Like Janelle said, my name's Brooke. I've been with Business Fuel and Boost Business Loans for about 7.5 years now. Business Fuel / Boost Business Loan has been around for 13 years, so we're certainly not new in the game. I'll just go on to maybe talk a little bit about ScotPac and who they are. They've been around for 35 years, so there's a lot of experience there. We've got 290 plus staff all across Australia. We've got an office in China. We also have an office in New Zealand. We've got a whole suite of products that are suited to all sorts of businesses. We're award winners, and we can do funding anywhere from 10K to 150 million. Why ScotPac? Well, as I said before, we've been around for a long time, over 35 years of experience. We've got 8,500 plus customers on our books, so that goes to show loyalty. We've lent over about 2.25 billion in that 35 years. We can support startup businesses, fund acquisition and buyouts and restructures. Most of our products you can access within 24 hours, so really fast turnaround for funding. And you can have online applications or face-to-face. So it's very personable. As Janelle mentioned before, how we can help, we've got a whole suite of products. Erin spoke to the asset finance product a couple of weeks ago, and Janelle can share that video with you if it's something that you are interested in. Mags is going to talk to the invoice financing and trade finance in a couple of weeks, which will be really interesting if it's something that interests you as well. And then we're going to go and deep dive into my product, which is the Boost Business Loans, the cash flow loans. So we'll get onto that now. So basically with our product, we can lend anywhere from $10,000 to $500,000. We break that up into 2 sections. You've got your $10,000 to $200,000 product, and then there's what we call our premium product, which is the $200,000 to $500,000. I'm going to start with the first section, which is the $10,000 to $200,000. The first thing about this I'll go into is security. So with these products, it's separated into 2 sections. If you're looking at a loan of between $10,000 and $100,000, do you need property? No. We can do an unsecured loan of up to $100,000 without property. When you're going from your $100,000 to $200,000 product, we do require property in the background. However, we may or may not secure on title. That just depends on how the assessment and the application goes. With regards to your loan terms, with your both products, so the 10,000 to 200,000, we can look at 6 to 24 month loan terms. When we're looking around the 50,000 and less, we try and keep it at a shorter term at the 52-week. But if there is some sort of interest from the client and it will get them over the line, we're happy to explore a little bit of a longer term for them. This is a bit of a point of difference for ScotPac per Boost, is our repayment options. Most other lenders either do daily repayments or weekly repayments, and they won't offer a fortnightly or a monthly repayment. We're happy to explore that for our clients, especially, for example, if there's a transport company and he gets paid once a month, it's easier for his cash flow if he pays a monthly repayment. Our lending ratio, when we're looking at loans of between, say, 10,000 and 50,000, we can look at a 1.25 lending ratio to the average monthly income. Mainly, we're looking at 100% lend. It just, again, it depends on how the assessment goes. And then we're looking at when we're over 50,000 to 200,000, we can again look at a lending ratio of 1.5, but we're trying to keep it around that 100% mark. We covered off the property and the securities, so we'll just go on to the bank statement conduct. With this product, we just want good, consistent sales. We'd like to see an upward trend or not a downward trend, lots of regular repayments, no other cash flow loans, no adverse, meaning the dishonest and gambling. But if there are any of those sort of things in there, it's not definitely a knockout for us. That's just your ideal client. With regards to the Equifax score, we do a personal credit check. We also do a creditor watch check. With our Equifax score, ideally, we want someone to have over 625. But again, it's not a knockout if it isn't. So then the minimal application documents that we require. Well, the information to start an application is just the ABN, the director's mobile, email address, and name. And then we can plug that into the system and send you out a bank statement link. One of the good things that we do with our product is we won't hit up the credit file straight away. We'll make sure the client is happy with our offer. And then once they're happy with the offer, we'll do the whole assessment, make sure there's no knockouts, and end with the Equifax score. That way, if they change their mind or there is some sort of decline, their credit file hasn't been hit. The minimum documentation for this product is basically your ID. We want the privacy and consents. As mentioned, we want the business statements as well. Sometimes we'll need to ask for some extra things, like if the company is a trustee for a trust, we'll need the trust deed. And that's pretty much it. Some things do come up, but that's your basic amounts. Settlements, like I said before, we're looking at doing those within 24 hours. Sometimes it's the same day, just depending on how simple the application is. But 24 hours, we're looking at our SLA there. So with regard, yeah.
Sorry, Brooke, we've just had a question come in,
Okay.
which is about the bank statements. Is it only through the bank statement link? Will Boost accept manual bank statements?
Look, the rule of thumb and in our credit policy is that the bank statement link has to be done. It just mitigates fraud and it gives us a proper picture of the company. Sometimes, and I know Ilian can be a bit temperamental, sometimes we can get PDFs and push them through into our system. If it is a very manual assessment, it's going to take a lot longer to get an answer, but having the bank statement link done will be a condition of the approval.
Awesome, thank you.
Okay. Okay, and so now just with regards to the facility fees and fees in this product, so the rates will start from 16%, and that comes with a 2% commission. If you're looking to increase your commission, we're happy to do that. We'll just increase the facility fee, which is our interest component, and we're always open to that. And then the only other fee that we charge is a drawdown fee, which is 3% of the loan amount, and that'll come out at settlement, so the client doesn't have to come up with it. And then that's it. There's no other fees. There's no direct debit fees, account keeping fees, nothing like that. It's just your facility fee, your interest component, and then the drawdown fee.
And just on
So
that
then,
drawdown fee, sorry, Brooke, just on that drawdown fee, does that come out of the loan proceeds or is it on top?
It comes out of the loan proceeds. So, for example, if you have a $100,000 loan, we'll take $3,000 and the $97,000 will be dropped into your account.
Awesome, thank you.
Okay, so now we'll move over onto our premium product, which is the 200 to 500,000. The assessment remains the same, but some of the requirements are a bit different. So with the loan term, we can offer a loan term of up to 36 months as opposed to 24 months, just because it's a larger amount and it will keep the repayments down for the client. With the repayment options, we can do the weekly, fortnightly and monthly, just like the previous product we had there. With what we can lend up to 150% of a client's average monthly income, as long as it doesn't go over the $500,000 there. So this next one is a little bit different. So is property required? Yes, it is. We require a property that will have an LVR of 80%, including our loan. So, and we're going to register a second mortgage on title. We require that the first mortgage is only with a regular lender, no private lenders with high interest or anything like that. So yes, property is definitely required. With regards to bank statement conduct, this premium product is really for the A+ clients. So we want to see consistent monthly averages. We want to see a nice flat line or upward trend. We don't want to see any adverse or gambling or other cash flow loans. If they've got one of all of these things, that's okay, but we really want it to be an A+ client, especially with regards to their banking. With regards to the Equifax score, this time we do require a minimum of 625 personal Equifax score. If it's below that, it's a knockout for the premium product. The trade length, again, this is a little bit different to the other product. We require them to be trading at least 36 months, so 3 years. With the previous product, it's ideally 4 years, but they can be trading from 12 months. Okay, and then the same for the application. It's the minimum information that we need, just an ABN, mobile, email, and the name to get the application started. And then we'll get the bank link and do that preliminary assessment. There are a few extra documents we will require for this product. Obviously, we still need the ID and the privacy and the banking, but for this, we're going to need some ATO information, and we're also going to need a statement of deposition, which really is just a simple letter or email from the first mortgagee that says, we confirm that the total debt secured by the property at this address is this amount. That way we can confirm that there's no other say bank guarantees or business credit cards that are attached to the property that isn't mentioned just on a mortgage statement. With regards to settlements, this is a bit of a furphy with the 24 hours. It can take a little bit longer because we do order proper valuations. So a valuer is going to come to the property and go inside and do a proper one, so we can get a proper look at that. So sometimes it can take more like 72 hours, especially as well since we're getting second mortgage documents done up and the client may have to go and see their lawyer and get everything witnessed. And then we'll just go down into the facility fee. So this is a cheaper product because it is our premium product. There's only two pricing for this. We've got 12% with a 2% commission or 13% with a 3% commission. And then again, the only other fee is a drawdown fee, which will come out of the funds at settlement, and this one's 2%.
Got you. And just on that fee structure, the questions come through. Is it a fixed? Is it amortizing? How's the fee structured?
Okay, so we call it a facility fee. It's just a one-off fee, which is an interest component, so simple interest, which is added on top of the loan amount at the time of funding, and then is included in your weekly repayments.
Got you. So for instance, if I was a customer that was borrowing $100,000 at 16% to make it easy, the loan would start at $116,000. Is that
correct?
How it works? Yeah, got you. We've just had another question before we go on to the next slide, Brooke, which is around the property, so around the premium product, do you take all forms of property security, so land, commercial, resi?
Yep. So we will take land, commercial, resi. There are different rules involved with those. We do have a list of excluded properties though. So that would be, say, something that's still under development, a residential that's still getting built, a rural property that's 200 kilometres away from a city. If there's multiple owners that aren't related to each other or aren't husband and wife. The other thing I will mention too is for this premium product, if the property that we're using as security or properties we're using as security are owned with a spouse and the spouse isn't a director or anything, we still require the spouse to sign as guarantor.
Understood. That makes sense.
Yeah.
And you said there that it's a real valuation, so there's no desktop valuations involved with this product?
So for the premium product, it's a real valuation. We have a panel of valuers we can order it through, and they'll actually visit the property and do a proper valuation. So we've got, our information correct. With the sub 200 product, it would just be a desktop valuation.
Understood. That makes sense. Thanks.
Okay, so this is our 4 pillars of credit decisioning, and this is how we score and assess our applications. So every application is scored out of 100, and you've got the 4 different decision-making things here. So the first one I'll come back to. We do trading length. So you get a score for trading 1 year, 2 year, 3 year, and then 4 year plus. It's 8, 6, 12, 16, and 20 being the best. We do have a product where if you are trading between 6 and 12 months, we can have a look at a loan for you. However, we do require you to be a property owner in the background, and the maximum loan amount would be $30,000. Then the next heading we're looking at is the credit score. So we can look at credit scores as low as 400. Ideally, we want clients over the 600, 625 mark. If a client is under 400 in a credit score, we can still look at an application. However, they wouldn't be able to have any defaults on their credit file, and they'd need to be a property owner in the background. So again, the credit score is scored out of 20, with 20 being the best. Then with properties, this is out of 20 as well. I kind of touched on it before. If you don't have any property, you get a 4. If it's an excluded property, like with the multiple owners or with a private lender, you get an 8. If it's just with a normal mortgagor, you get a 12, but we're not registering on title. If we register on title, but the LVR is over 80%, you get a 16. And then if the LVR is under 80%, including our loan, you get a 20. So it sort of graduates up that way. And then our main part of the assessment is the income and your banking. So the main things we're looking at here, and I've mentioned them before, is does the client have consistent income, or is it lumpy? Does the client have an upward trend? Thanks, Danelle. Does the client have an upward trend or a downward trend? Are there any dishonors or gambling or other cash flow loans? Now, in saying this, even if someone does have some of these adverse or a downward trend or something like that, we can still look at a loan. It just might diminish their score and diminish how much we can lend them. Next. Okay, so how we can help your client. So this, we can help your client for any worthwhile business purpose. So, and we lend to all industries as well. There's no industry restrictions. We can lend to gun shops, we can lend to adult entertainment, transport, construction, but as long as it's for any worthwhile purpose, we're happy to look at a loan for your client. Okay, so we've got a case study here. We've got a couple of them. So the majority of our loans are unsecured. So this first one here is an unsecured loan that we did for a steel fabrication business. They had a chance to get a piece of equipment that was unique. So other traditional asset finance providers couldn't lend them the money. So we had the ability to offer them $110,000 unsecured, and it helped them purchase this new piece of equipment. They were funded within 24 hours. It really solved the problem for them because they couldn't go through that traditional asset finance, and a happy client.
Yeah. And just a question that's come through now, Brooke, is around the lending. So someone just wants to confirm that in this particular case, this client would have had a minimum monthly turnover of 110K to be able to get this,
Correct.
get that. Is that, they've assumed that correctly?
That is correct. Now, because the loan is over 100,000 as well, and it is unsecured, I mentioned before, if we're looking at a loan between 100 and 200,000, property is required in the background. We won't necessarily secure. So this person obviously had property in the background, but we didn't secure on title.
Got you.
Okay, so this one is a secured loan that we did for someone for 200,000. They had their supermarket and they wanted to do a fit out and buy some stock at a discounted price, and that got them to expand their supermarket as well and would help with future costs. The application might not have been that perfect, which is why we would have secured on the property. But it worked out for the client because they got their 200,000. They were able to do the fit out and get the stock that they needed at a discount price. And again, this was funded within 24 hours. We're looking with the loans of 200,000 and or less. We're only looking at doing a caveat. Only in Queensland we'd be looking at doing a second mortgage because the caveats expire in 3 months. But we were able to help this person out, and yeah, they're again another happy customer.
Absolutely, and I think getting access to funding is so important. And you know, we know that everyone's sort of tightening up, and you know, rules and warehousing lines and things are making it, you know, more difficult. So it's nice to be able to see that, you know, typically an unsecured lender can come in and be able to offer a secured product via property.
Yeah.
You know, you're really trying to find a solution for the right clients.
That's right. And again, it's not non-traditional funding. So the fact that we can do it so quickly and they're not going to lose out on that stock or being able to do that fit out is really handy.
Absolutely.
Okay, so how do you get your applications in? We've got an amazing partner portal. All you have to do is register on there. You can always contact me and I can help you through it. But on there, we've got tools such as a product selection tool. All you need to do is type in who your client is, what they're actually looking for, and it'll spit out what products that ScotPac has would be most suited for them. We have a central lending team that will contact you and go through all those products, and you can discuss that with your client and what would suit them most. But always feel free to just give me a call or any of the team here. We're happy to go over any scenarios or talk about any clients that you've got. There's always someone available to speak to at Boost. But yeah, feel free to have a look around that partner portal or reach out to me if you need a little bit of help to get on there.
Excellent. So I will leave up here. I'll just leave this up here for now. Obviously, as you mentioned, you've got BDMs for all of the different products all over the country. And, you know, you can certainly reach out to Brooke directly, or if you already have a relationship with an existing BDM, then you know where to go, and they're all sort of working across all of products. So do you see, Brooke, a lot of, you know, cross products? So where Boost may come in and, you know, an asset finance product or Boost with a debtor product. Do you see a lot of clients getting sort of more than one product with ScotPac now?
Yeah, definitely. We'd like to see everyone have the whole suite of products, but there sometimes is a need for it. For example, just say someone is changing their debtor finance person, and there is that lapse between changing over where they need that cash flow. That's where they can come to Boost to get a loan to sort of bridge that gap between finishing with their last debtor financer and coming over to us. Again, we can help with asset for a deposit for an asset that they've got, and Scott back can do the rest. So there's a lot of cross clients over Scott Pack and our products.
Yeah, absolutely. So guys, as we start to wrap up, I've already sort of got 4 or 5 questions here already. So I missed a couple as we were going through the slides, you know, technological difficulties, and I didn't quite see the chat box. But when you spoke before about rural property, obviously there's a bit of a kilometre situation, but is there a size? You know, we see a lot of people with big, you know, thousands of hectare farming properties and things like that. Is there a max size on rural property?
No, not necessarily. As long as they're within that 200-kilometre range of a city, we can definitely have a look at them. We want to have a dwelling on that sort of property, though, that is tangible. But no, there's no general restrictions on a size.
Got you. And we spoke before when you were going through the products around, you know, obviously the premium product, no defaults. Just talk to me about what sort of defaults are acceptable when brokers are considering coming to Boost for a loan.
Okay, so the main thing for us is if you've got an ATO default, which we're seeing all the time coming on the creditor watches lately. If there is a default lodged, that's an auto knockout. You need to go away and get your payment plan sorted and have it removed. The other auto knockout for us is any finance defaults. So if you have a finance default and it's unpaid, even if it's in a payment plan, that's an auto knockout for us. If you still want to go ahead with our loan, we're happy, and you say you want to go and pay out that finance default, we're happy to continue with the assessment and the application and get an approval in place. But you need to go and pay that finance default out and wait 30 days before funding. It's mainly because it just goes to character. Like you're paying out the default just to get the loan. So that's why we do that.
Absolutely.
But telco defaults, we're pretty okay with. We have certain parameters around it, but telco and electricity and supplier and workers' comp, we're pretty okay with.
Okay, good. And ATO, it's the acronym that is on the tip of everyone's tongue at the moment. When you said about having a default lodge, do you require proof of current ATO commitments being met?
Yeah, so look, when we do any loan that's over $100,000, if there isn't a default on that creditor watch, we're still going to ask for 3 things. Your ATO summary, which shows you all the accounts that you have with the ATO and what the debts are. We're going to get the activity statement for all those accounts. And if any of those debts are over 100,000, we want to see the payment plan that it's in and that it's manageable. Then the reason that we do this is because the ATO has said, if you've got an ATO debt over $100,000 and you're not in a payment plan and you ignore us, we're going to default you. So we want to make sure they're in a manageable payment plan and they've taken care of their debt.
Yeah, absolutely. Last question now, although I can see the little dots moving, so that's probably sparked another question. Stacking. So that's a terminology that most of us understand that are in the commercial space already or have had a fair bit of exposure to unsecured lending. Your policy, I know it said there about not having any others, but can you pay out one with your funding? Can they have one? Does it depend on who the lender is? Like how do the rules sit around that?
Okay, so we are happy to come on as a second lender if you've already got a cash flow lender there. We do take into account what the balance is of that other cash flow lender's loan within our lending margin. So, for example, if we're doing $100,000 for someone and they have $50,000 balance with a competitor, we can look at a $50,000 loan. Alternatively, if there's only the one other cash flow lender there, we can look at doing $100,000 and pay out that other cash flow lender. When there's 2 cash flow lenders, again, we can take out one of them and come on as a second lender. When we're getting above 2 cash flow lenders, like 3, we're going to call this a debt consolidation. We can still look at paying out all 3. We'd have to pay them all out, and we'd want to register on title of a property, and the LVR would need to be 80% or less, including our loan.
Excellent. Thank you. That's really clear. There you go. It was an ATO question. So if someone is meeting their current commitment schedule, so their current ATO is up to date, but they have a debt that they want to pay, can they use your funds to pay the debt if the current is up to date?
Yes, you mean to pay the ATO debt?
Yes.
Yep, we're happy to use funds to help pay down ATO debt. That's no problem, as long as there hasn't been a default and they have been keeping up with their current commitments. We don't want to see them sort of being pay, and then stop and then wait a while and then they're almost going to get defaulted and then come to us. But we are happy to pay out ATO defaults, or sorry, not defaults, ATO debt, and or pay them down.
Yeah, good. And that's good, because we do see that where, you know, it's been circumstantial, and we all know that they're, you know, are life events. They happen to business owners as well. And so you'll see that it can be sometimes a build up of previous years, but their current, you know, BAS, GST, etc., is all up to date. And so sometimes it's just being able to clear that backlog from previous time. Brooke, is it right to surmise that there's a fair bit of flexibility and understanding in the sort of under 200K product, and then the premium product is very set and firm in its minimum criteria? Is that a good way to sort of summarize that?
Yeah, absolutely. Like I said before, the premium product, we want our A1 customers. It's a lot of money and we don't want to be just willy-nilly giving it away. So that's why we've got our parameters around being quite strict for that premium product. There is a lot more flexibility within the $200,000 and less. When I went over how we scored them, we have a scorecard where we have our A1 customers who are in score band 1, and then not so great in score band 4. So there's still some flexibility there. It's just different parameters about how much we can lend, depending on where you land in those score bands.
Yeah, absolutely. That would appear, I cannot see any more questions in there at the moment. And as I like to say to the crew, it's always good to be short and sharp and give people back time in their day. But it's been really insightful to see, you know, normally when we host sort of these sessions, you know, you're looking not to do a deep dive, and we're sort of doing this very light fluff over the top of what the product is. And a lot of people were really wanting to know out there what a lender is looking for, because not all lenders have that same philosophy of leaving the Equifax check until last.
Yeah.
And so we all know and understand the detriment of too many inquiries, let alone defaults. Inquiries can be just as damaging to your credit file. So look, from certainly from the WCFF perspective, for anyone that is watching this today or is watching it later, if you're searching for an unsecured or a secured for over 200K facility for your client, we can certainly highly recommend that you speak to the team at Business Boost. And again, you know, always bearing in mind that you do have that cross-product capability. So if it's not something that Boost can help, it may actually be that one of the other ScotPac products can. So again, personally, it's really nice to see you, Brooke. Professionally, it's, you know, lovely to be supported by ScotPac Business Finance. We really appreciate the time that you spend with the WCFF and supporting what we're trying to do in the community. Please, if anyone would like to reach out to Brooke, let me know if you didn't capture those details. We will be uploading this video towards the end of the week, ready for all of those downloads while you're either listening on the way to work or on the train. Brooke Johnson, Team Leader of Sales at Business Boost, thank you so much for joining us today.
Thanks, Tommy.
Thanks, Brooke.